Okay, let's dive into this explainer. Today, we're going on a seriously intense cautionary journey into a place that is way, way more volatile than any crypto chart out there. We're stepping right into the claustrophobic mind of a trader. We're going to break down the internal market and, really, the raw psychology of trading failure. Think of it as a deep dive into the absolute mechanics of self-sabotage, looking at how our very own hardwired instincts can literally turn against us when the stakes are high. The market didn't take his money. His emotions did. I mean, wow. Let that sink in. That is the stark reality. While we are all out here obsessing over candlestick patterns, moving averages, and support lines, the true arbiter of whether your portfolio survives, it's emotional regulation. The real battleground isn't on that screen in front of you. It's in your own mind. We think we're fighting the market, right? But actually, we're just fighting ourselves. The market, it's just numbers. The failure happens entirely on the inside. So, picture the scene. It's a dimly lit room, our relatable trader is sitting there alone, and his physical state is already completely heightened. His face is lit up by nothing but this aggressive glow of green candles flashing on incredibly volatile screens. He's watching the chart. The price is moving up, fast. The rapid flashing of the order book, it's almost mesmerizing, isn't it? The sheer speed of the market is giving him this massive dopamine hit before he's even made a single move. His pulse is quickening. It's tense. It is totally mentally overwhelming. He thinks about entering. He knows he wants a piece of this action, but he waits. What if it drops? Right there, that protective instinct of fear kicks in. You are watching loss aversion happening in real time. It's this deep psychological principle that the pain of losing is hardwired into our brains to be twice as powerful as the pleasure of gaining. And this completely human trait, it paralyzes him at the exact moment he should be executing his plan. So he just sits there, firmly on the sidelines, second-guessing absolutely everything. Now, what's really interesting about this slide is how the market completely ignores his hesitation. It doesn't care. It doesn't drop. It just keeps surging higher and higher. And ironically, this relentless upward climb, it becomes the exact catalyst for his downfall. His ego starts to bruise as he watches the opportunity slip further and further away. The numbers just keep compounding. The green candles keep growing taller. He's watching potential profits vanish into someone else's hands. And you know what happens? That protective caution slowly mutates into this really toxic sense of inadequacy. Then the internal monologue shifts violently. What if I miss this? That right there is the true fear of missing out, FOMO. And look, it's not just about missing out on the money. It's the profound, agonizing psychological pain of feeling left behind while seemingly everyone else in the world is winning. Suddenly, the absolute agony of waiting, of just sitting there watching the price pump without him, feels infinitely worse than the actual danger of risking his capital. Logic? Logic is totally out the window. Emotion has completely taken the wheel. So, he buys. Not because it's a statistically good trade, not because of some carefully calculated risk-to-reward ratio. No, he buys purely because he is absolutely terrified of being left behind. That buy button, it isn't pressed as part of a strategy. It's an emotional release valve. He hits it just to make the unbearable psychological pain of watching that chart go up without him stop. It is a completely impulsive entry, born entirely out of desperation. Just look at this timeline. In just 75 seconds, we are witnessing a complete psychological breakdown. It starts at zero with just, mere curiosity. By 30 seconds, FOMO has entirely hijacked his brain. At 60 seconds, he makes that impulsive entry. And then, at 75 seconds, the dopamine crashes. Buyer's remorse hits instantly. Literally seconds after his money is on the line, the momentum just dies. The green candles stop, they hesitate, and then they turn red. The market abruptly slows down, and the agonizing descent begins. And now, fear takes absolute control. What if it crashes? What if I lose everything? This is a full-blown amygdala hijack. His literal fight-or-flight response has been triggered by a crypto chart on a screen. His heart rate spikes. His breathing gets incredibly shallow. Any logical thinking is completely shut down by the deafening alarm bells of absolute panic. These thoughts are just echoing, loud and terrifying in his mind as he stares at this plummeting chart. Blind panic has officially set in. He sells. At a loss. This is capitulation. Driven by the pure, unadulterated terror that the market is going to completely collapse to zero, he hits the button. And he doesn't sell because the market structure broke or because his original thesis was proven wrong. He sells simply because he cannot endure the emotional pain of looking at that red screen for one single second longer. He is literally paying a premium just to make the fear stop. The loss? It's permanently locked in. But wait, then comes the ultimate punishment. That intense fear of a crash is instantly replaced by the absolute agonizing frustration of a reversal. Literally, the very second he locks in his loss, the market bounces. It shoots higher than before. It goes exactly where he originally thought it would go. The relief he so desperately sought by selling completely evaporates. And in its place is this deep, burning, toxic frustration. The market didn't just take his money, it feels like it actively mocked him. So the crucial point is this single thought: I need to win it back. That is without a doubt the most dangerous phrase in trading. This marks the exact pivot into revenge trading. The very moment this thought enters his mind, he is no longer an investor. He's not an analyst. He is a gambler trying to get even with an inanimate market. All planning, gone. All strategy is completely abandoned for raw, unfiltered, venomous emotion. The need to be right just completely overrides the need to be profitable. And this brilliantly illustrates what happens next. He's entered the chaos loop. Step 1, buy high out of greed. Step 2, sell low out of fear. Step 3, repeat. He enters again, but it's faster this time. Rapid clicking, switching positions based on absolutely nothing but adrenaline and spite. There is no thinking going on here. It's just reacting. Every single decision feels like life or death in that urgent moment. But this emotion-driven cycle, it is a mathematical guarantee of total ruin. The charts blur. The indicators completely lose their meaning. Fear, greed, panic, and impatience. They are all firing at the exact same time. It's total cognitive overload, a complete mental collapse. Imagine a deafening roar of conflicting internal noise that just completely crushes any remaining sense of logic. The brain literally cannot process the data anymore. It can only feel the threat. The pressure is just suffocating as he wildly throws capital at the screen, hoping for a miracle that, let's face it, never comes. Then, silence. The adrenaline finally wears off. The rapid clicking stops. He just stares blankly at the screen. Losses everywhere. The account is drained. The frenzy is completely over, and it leaves behind nothing but this profound emptiness. It's a sobering, quiet, and absolutely devastating aftermath of a massive emotional storm. The reality of the numbers on the screen slowly sets in, replacing all that frantic energy with the crushing weight of realization. He finally understands. Let's deconstruct this postmortem for a second. The market didn't hunt his stop loss. The market was just breathing, doing its thing. It was the fear of missing out that forced a completely bad entry. It was the panic of losing that forced a terrible exit. And it was his ego's absolute need to recover that dragged him right back into the shredder for more. These internal emotional failures, not the external market conditions, are what actually drained his account. Because in trading, the biggest enemy isn't the algorithms or the unseen whales manipulating prices out there. The biggest enemy is in your mind. Without rigid discipline, without a solid system to ruthlessly manage these primal emotions, the charts are always going to win. The market is really simply a mirror that reflects your own flaws. So I want to leave you with this provocative final thought. Tomorrow, when you sit down in the dark, pull up a volatile chart, and get ready to click buy, ask yourself, who is actually making this trade? Is it you or is it your emotions?